Domino's and McDonald's are holding investor days next week, where we'll hear the company's outlook for 2024 and their key strategies to grow business. My next guest says Domino's will likely focus on third-party delivery, loyalty, and tech, while McDonald's will focus on store growth and corporate structure. In either case, he sees upside of 10% for both stocks, rates him as a buy. Brian Harbour is here. He's a restaurant analyst at Morgan Stanley. And Brian, it's good to see you. Welcome.
Thanks, Kelly. Thanks for having me.
I have some giant chicken nuggets over my shoulder as we discuss this, but it's going to be all about McDonald's and Domino's next week. By the way, do you cover Wendy's, given what just happened there with what there might be an activist shakeup?
We do cover Wendy's. Yeah, I mean, fundamentally, I think we've been a little bit more cautious on Wendy's relative to McDonald's, for example. I think when McDonald's is performing very well, it does, kind of squeeze some of the competitors like Wendy's. I'm not sure kind of how that whole activist situation shakes out at this point, to be honest.
No, and nor does anyone else, I think. But it's interesting you said McDonald's is performing quite well right now. What are the numbers that back that up, and why is that?
Well, if you look simply at their same-store sales growth in the U.S., for example, as well as outside the U.S., it's been double digits recently. It's been incredibly strong, and they had previously delivered positive traffic growth in the early part of this year. I think what's really working for them is they've had an incredible marketing calendar. They've done a lot of collaborations, and it's not just one time. These have been successful repeatedly, and it's been very impressive just how they performed coming out of the pandemic, really on a sales basis. We've been quite impressed by that.
Is it price? Is it traffic?
It's both, and it's more pricing. You're seeing that start to come down, but for much of this year, they did have traffic growth, and a lot of their peers were seeing traffic declines. So it has been the case that they've been taking share from a lot of the industry so far.
I've read, and maybe the changes have already come through, that they've been trying to do a lot with their burger to make it more tasty. What do you think is driving this outperformance relative to the rest of the space?
Yeah, that better burger design is being rolled out globally at the moment. There's still more to come there. So the reality is, I think that's a pretty attractive driver as you go into next year. People's standards are higher today, and McDonald's is trying to meet that as well. So I think that's kind of a multi-year driver that we're just in the midst of rolling out. But like I said, they've done some very impressive things, like the Grimace Shake, for example. A lot of these things have been viral hits, and it's not just one thing. They've been doing this for several years. So there's some replicability to this, I think.
Yeah, if they can get it right, get Gen Z on TikTok talking about the Grimace Shake or what have you. Are they into the influencers? Are they into Domino's? I mean, that stock obviously was the stock of last decade. It's been a little bit rockier since.
The main issue for Domino's, I think, has been that pizza was so heavily consumed early in the pandemic. Everyone was ordering delivery pizza. And then you've had a couple of years where that's really normalized. And it's been a lot tougher for Domino's as that wave has come off. So they're really trying to reverse the narrative as you go into next year. They're trying to drive delivery sales growth, which delivery has frankly been declining for the last 2 years. So, this analyst day next week will be very much about how do we start to tackle that opportunity and get people to come back to delivery pizza.